Hello everyone, today's vlog is all about spreading your tax bill. Specifically the announcements that have come in for the coronavirus pandemic in the UK. HMRC have offered several opportunities for different types of taxes to be spread. So delay, defer payments over a longer period. It's not a tax amnesty, it's not a reduction in tax, it's just a deferral in tax. So it's not a tax reduction policy, but just easing the burden of when you have to pay it. So, starting with income tax. So what was already announced earlier this year during the pandemic was that if you have any July the 31st income tax due, which thousands of people under self-assessment do, it's typically the point at which you pay the second payment on account. So for this summer, it would have been the second payment of account for the 1920 tax year. That would have been due in July. Now, there was a mechanism previously announced earlier this summer that said you can delay paying that amount until the 31st of January 2021. So that was an automatic thing that came in. You didn't have to apply for it. If you just owed any money in July, you could wait to pay till January 2021. No interest or penalties will accrue during that period. So that's great. So that gives people an extra 6 months to pay what they should have paid July 2020. Okay, what's changed more recently is that the Chancellor has announced an extension to that and has said if you have less than £30,000 of income tax due on the 31st of January 2021, you can spread that over 12 months to January 2022. So remember, the tax, that is very useful because the tax that is due, the income tax in January 2021, is not only the balance from the 1920, i.e. the 6 months grace period that's been given for the July 2020 payment, but you've also got the first instalment of the 2021 tax year income tax bill. So it's almost like a double whammy. In January, you've got the catch up from the previous year, and you've got the first instalment of the next year, the next tax year. So potentially two hits, two big slices of income tax due in January 2021. Now, the £30,000 limit is not pegged at the £30,000 that you deferred from July only. It includes both the amount you deferred from July and the amount that's owed in the 2021 tax year that would have been owed in January 21 anyway. So you add up the two elements of what you owe in January next year, balance of the previous year, first instalment of this year. If that is less than 30,000, then you apply under the time to pay arrangements, and you can spread that over 12 months from January 2021 for income tax. Now, that will accrue interest. From the 1st of February, that will accrue interest. Interest at 3% per annum. So, HMRC giving you an interest-free period from 31st of July 20 to 31st of January 2021. But thereafter, if you go down the further spreading of the tax bill, interest accrues from the 1st of February. Now, what if you owe more than £30,000 at the 31st of January 2021, either because you've deferred the July 2020 payment or you've got the first installment of next year? Well, you may as well call up the time to pay helpline and see if they will let you spread it. They've said that if it's less than 30,000, it's automatic, more or less, no questions asked. We'll wait and see if that turns out to be the case. But certainly if it's above 30,000 and you want to spread it, then still, you've got nothing to lose by trying. Call up HMRC's time to pay TTP hotline and see if you can spread that income tax debt over 12 months, even if it's more than 30,000. Then, of course, the other thing you can do is just make a claim to reduce your payment on account anyway. So remember how the self-assessment system works is that these payments on account that you make in January and July each year are only estimates of the tax that's owed for the year. The true figure only comes out much later in the year when you do your tax return. So the system says that until we hear otherwise, HMRC will assume that you've made as much profit this year as you have done last year to base those estimates on. So the point is, when we get to January 2021, you will pretty much know exactly what your profits were for the 1920 tax year and have finality on that. But the first installment for the 2021 that's also due in January 2021, that's just a guess. That's just going to be half of the previous years until you've done your tax return, which could be 6 months down the line. So you're quite within your rights to make an election to reduce that payment on account anyway for January, the element that relates to the 2021 tax year, because thousands and thousands of businesses will generally be in a worse off position profitability wise compared to the previous year because of the pandemic. So don't just assume that your liability for that first installment for next year is based on 50% of what you earned the previous year, because if you've generally suffered a downturn in business and profits are lower, then you are quite within your rights to elect to reduce the payment on account anyway. So have a think about that. Have a think about what your anticipated profits are. Even though it could be months before you need to do a tax return to get finality and work out exactly what the figure is, you could still have a pretty good idea, because that would also mean, again, you could reduce or spread your tax bill, and it could even get you from above 30,000 to below 30,000 owed January 2021, and then you have no problem spreading over the next 12 months. So that is where we are with income tax. Now, the other tax is VAT. So you remember at the start of the pandemic, the Chancellor announced that any VAT that was due between 20th of March and the 30th of June 2020 could be deferred and not paid until the 31st of March 2021. So any VAT that was due in that quarter or just over that 3-month period, you didn't have to pay it then. You could wait till March 2021 to pay it. But similarly with the income tax extension, there's been a VAT extension to those original rules. And now the Chancellor has said that that amount that was deferred from spring of 2020, which becomes due in March 2021, can be deferred for a 12-month period to March 2022, spread out in a similar way as with the income tax. So that's good from a cash flow in these difficult times, that you can spread both your VAT obligations and your income tax obligations. And then on the other taxes, things like corporation tax and pay as you earn, you can always contact the HMRC's time to pay helpline, like I've already mentioned in this video. There's no specific rules on corporation tax or pay as you earn like there is for income tax and VAT in terms of specific rules on extensions of payment deadlines, but you still have this fallback to the time to pay helpline where you call up HMRC, you tell them your predicament, and then hopefully they will say over the phone, yes, you can spread your pay as you earn debt or your corporation tax debt. Sometimes they won't agree it over the phone straight away. They will ask for evidence of lack of affordability, and you put together some cash flows to show how much you can afford to pay on an installment plan, and that's how you get the spreading of the tax on those other taxes. So if you like this video, please do subscribe up here, and I will see you soon.